Hi, this is GBPUSD and today it's Wednesday, 31st of July 2013 and the time is 11:03 GMT. We are looking at the H4 time frame of the pair and we had a bearish move. We saw the pair falling down extremely strongly yesterday, and we are getting short entry signals. So I'm using Ichimoku Kinko Hyo. Here you see the Kumo, you see the red line, Tenkan Sen, Kijun Sen, the blue line. You see Chiku Span, the green line, which imitates price action, and we'll use it as an entry filter. And once we see why Ichimoku is giving us short entry signal, we will use some other tools to confirm our entry. So we see on the H4 time frame that the pair is just ready to make a bearish Kumo breakout. It almost succeeded in making a bearish Kumo breakout. But we would like to see at some point Chiku Span not only going below past price action as it does, not only looking straight down as it does, but also being below the Kumo. Okay, this will happen. It will take some time. Okay, so let's go to the bigger time frames to see the big picture. Daily chart. We see that on the daily chart we had a bearish Kumo breakout, and the price was attracted to the flat bottom Kumo, and it made this upward move, and now it's falling down again. Okay, on the weekly chart we see that the pair is moving below the Kumo. The market sentiment is bearish. We see that Chiku Span was turned upwards because we had this big move, upward move, but now it's turned downwards. The leading Kumo is bearish. It has flat top, and this is 50-50 because flat top Kumo, but half finished, has a bullish potential, but we have a big distance between second span B here and second span A. If these two meet each other, they will give birth to a bullish Kumo and we will have a reversal. But the distance here, the distance was very close, so you would expect a reversal, a bullish reversal. But here we see that the distance between second span B and second span A is bigger. That signifies bearish momentum increasing. So the possibilities are that the pair will keep falling. And the distance between the price where it currently is, the vertical distance from the Kumo, and the horizontal distance from the Kumo is big. So it means that it's rather easier for the pair to keep falling than trying to reverse, to go up again. But we will see. On the monthly chart we see that the pair still moves below a very big bearish Kumo, although at the edge here the effort of the pair to go up is being recorded. Let's go back to smaller time frames. We saw the daily time frame. This is the H4 time frame. And on the H1 we have a clearly bearish picture, 100%. No, it's not 100%, it's 90 something, because we see Chiku Span being turned upwards. We will wait to see it going straight down before we enter. Okay, ignore my entry line here, which is at 1.5200. At the moment I put it there, it was everything was looking bearish, but we may have a small bullish move for now, and you should wait till it finishes in order to enter short. Okay, so what we want to see? We want to see Chico span going straight down, not turned upwards as it is now. Price goes straight down, Tenkan Sen, Kidzen Sen, they are almost vertical. Leading Kumo is bearish. It's not sharp at the edge, it's a bit rounded, but it's definitely bearish. We wait for Chico span to turn down. M30, we wait for Chico span to turn down. It's on a small bullish move now. M15, we wait for Chico span to turn downwards, to go straight down. M5, we had this candlestick, this bullish candlestick forming now, which tells us to wait before we enter short. We want this move to finish and Chico span start going downwards before we enter. And M1, we see here from M1 that the price made this upward move, and now it looks like it starts falling. So we will wait on the M1 chart everything to look bearish. We had a bullish Kumo breakout here. We will wait for the price to fall below this Kumo again. Once this happens and Chico span goes straight down below past price action and below the Kumo, of course, then we go to M5 to make sure everything is bearish and Chico span goes down. Then we'll go to M15 to make sure Chico span goes down. It doesn't happen now. Then we'll go to M30 to make sure Chico span will go down. To H1 and make sure that Chico span is turned straight downwards. And on the H4 chart everything looks bearish for now. I will insert MACD as a confirmation. We need one more confirmation. And what do we see? We have the zero line here, the 0.11, at the histogram of MACD. Above zero line is bullish and below zero line it's bearish. So the histogram represents momentum. Bullish momentum increases above the histogram and decreases to give birth to bearish momentum, to the bearish histogram, which hangs below the zero line. And this light blue line is the signal line. We see that we just had the signal line running downwards beside the bearish histogram, which has been built with increasing bearish momentum. That's a definite trigger, a definitely bearish entry signal. So enter short, sell around 1.52 or higher, 1.5200 or higher. I explained to you how you will find which is the best point to entry. Wait from the small time frames to make sure that Chico span goes straight down before you enter. We put our stop above, according to the H4 time frame, to this chart. We put our stop above the Kumo, above the upper border of the Kumo. It's 180 something pips. It's a big distance, but it's a pair with big fluctuations. We don't want a sudden move for some big funds which want to enter to not to miss this. They may push the price up, kill you, kick you out, make you lose money, and then they will enter short heavily. They need liquidity for their positions, for their orders, and they will then enter short, but you will be out of the game. We don't want that. That's why I put my stop in some pairs. I put it far away from the entry to make sure there is no risk of losing our money and being kicked out of the trade before the party starts. Now, take profit target. Let me remove MACD from here. A realistic take profit target here using Ichimoku is this. We enter at a bearish Kumo breakout on the H4 time frame. we should exit when the bullish Kumo breakout happens. Do you want an example? Okay, here it is. We had the bearish Kumo breakout at this point here. Let me insert an ellipse. Okay, it's not the easier. Okay, we had a bearish Kumo breakout here on the H4 time frame, and a bullish Kumo breakout here. So I will insert another shape. So from here to here, those were the profits. This is the logic between entering with a breakout, exiting with a breakout, making your take profit target like this. It's simplistic, but it's quite doable. Okay, quite achievable. The other way, if you are more conservative or if you are a bit more greedy and you want to keep more money and not lose some, is by trailing your stop above 100 pips, no more, or maybe some will say if 50 pips is enough. I don't think 50 pips are enough. 100 pips above its new lower high validated by the consequent price action. When the price falls, it makes lower lows and lower highs. So when it goes down, it will retrace, make a lower high, then fall down, make a lower low, then again a lower high. So you will trade your stop above the next lower high after it is confirmed and validated by consequent price action. That's the logic behind trailing your stop. So this is it, and thanks for watching and happy pips.